Fast food giant McDonald's reported its third quarter results this morning, and revenue came in at around $6.9 billion, beating Wall Street expectations, and same-store sales in the U.S. increased by 0.3%. CBS News MoneyWatch correspondent Kelly O'Grady joins me again here in Studio 55 to discuss. All right, so let's talk about what these results tell you about how McDonald's is performing, Kelly.
So I like to think of this as the beauty of low expectations, right? So you see them beat Wall Street's expectations, but the bar was low. I like to think of McDonald's as kind of a bellwether for that lower income consumer. You've seen them really struggle getting those folks in the door. That's why they've had all of those discounts that brought back the Happy Meal and whatnot. So same store sales, you mentioned it rose. What that means is people spent more at the same store quarter over quarter, excuse me, Vlad. But less people came in the door. And so what is concerning here is what that tells me is, okay, yeah, people are willing to go in and they're willing to spend, but only if there's a good deal. And then you bring in the E. coli piece of this. Right. And there's just been a drop-off in foot traffic, which could be really problematic for the fourth quarter.
I was going to say, we're not going to know the effects of that E. coli hit until next quarter, right?
Exactly.
And we can see, I mean, look, they did the right thing. They recalled those onions. They stopped selling those quarter pounders, but those effects could be felt much later.
Yes, and think about the brand part of it, right? If you're someone who's like, okay, am I going to go to Wendy's? Am I going to go to McDonald's? You're thinking, I want to get my, Taco Bell. All right, we'll go up for Mexican after
exactly.
this. That could just kind of make you say, like, nah, I'm going to go to Taco Bell instead of McDonald's.
Okay, so speaking of spending money, consumer confidence, let's talk about that. There's a new report out this morning. What did it say?
Consumers are more optimistic about the economy. So this is an index. Basically, any reading above 100 tells you that people are positive about the economy right now and for the next 6 months. Came in at 108.7. The other piece of it, the little nugget, the double click, is the expectations index. Came in above 80, well above 80, 89. Why is 80 important? That's sort of the metric where you start to get the butterflies of, ooh, a recession is coming. The tea leaves here, why does this matter? 70% of our economic activity is consumer spending. So if people don't feel comfortable about the economy, they're not going to go out and spend. So this is good. The other tea leaves, right? VP Harris, she is currently responsible for this economy as well as President Biden. So you could say, well, this is a good thing. The other thing people are starting to say is, well, maybe people are pricing in a former President Trump win, and they're saying, oh, well, maybe things will be looking better. So it's kind of, you could look at it both ways.
Right, but it feels like, one of the things that we've been talking about over the last quarter is that the economy is strong, the economy is getting stronger, and yet people aren't feeling that when they go to the gas pump, or they're not feeling that when they hit the grocery stores. What is that disconnect?
It's how much money you're making, right? So we had inflation. I mean, over the past few years, the eggs, everything, car insurance is up. And yes, inflation is coming down, but the rate of inflation is coming down. So your prices are still rising, but then when you think about where you were a few years ago before we had this inflation crisis, your wages haven't kept up.
That's right.
And so that's the disconnect where you're saying, wait, hold on a second. This used to buy me so much more at the grocery store, and I just can't handle it.
Can't handle that because my wages aren't increasing at the same rate of inflation. Kelly O'Grady, always great to have you in studio. Keep coming back. We love having you. All right.